We're going to be hearing from Stephen Stewart, President and CEO of Orefinders. Orefinders has had a busy year in 2018 already. They started the year off by announcing a positive preliminary economic assessment on its Marauder mine, and they followed that up by announcing an acquisition and consolidation of 9 projects and what is called the Knight Project. In April, Orefinders announced the acquisition of the Mcgarry Mine, which last produced in 2013 and is located directly beside the 12 million ounce producer, the Cote De La Mine. And finally, it expects to complete the spin-out of its cobalt and nickel assets into a new company called Power One. And Power One is fully financed, and it's scheduled to trade on the TSX Venture in May of this year. Stephen, please take the podium.
All right, well, good afternoon, everyone. That's an awfully tough act to follow with Kelvin talking about Peter Monk, but I guess I'm just going to have to do my best, and maybe next year I'll get a better time slot. But no, Peter Monk meant a lot to everybody in the room, certainly to me, so it was really nice to see that. Anyways, my name is Stephen Stewart. I'm the CEO of Orefinders Resources, and as our brand new slide cover will tell you, we're exclusively gold and we're exclusively focused in the Abitibi. For those who don't know the Abitibi, it's one of the world's most prolific gold-bearing regions, and it runs east-west throughout Ontario and Quebec, and we focus there because we understand the geology, we understand the people, we understand the project, so we like to stay close to home. So this is the forward-looking statement. It's somewhat ubiquitous for anybody who's seen mining presentations. But I like to embrace it because we're going to be saying, or I'm going to be saying, a lot of forward-looking statements. But I do so on behalf of the board and myself, who are 30% owners in this company. We have skin in the game, and so we are really committed to this, and we believe in this company. We believe in the gold market. And you will be hearing us say some forward-looking statements. After all, we're in the mining business. It's a risky business, but there's lots of returns to be made if you play the cycle and you choose your horses correctly. So 2018 has been a very, very busy year for Orefinders. I'm going to throw a lot of information at you in the next 13 minutes or so, but there's 4 things I want you to remember about Orefinders, and all of these things happened in 2018. We're a brand new company in effect. The first is we made an announcement early, about 2 weeks ago. We acquired what's called the Mcgarry Mine. Mcgarry Mine is located directly beside the Cote De La Mine, which was one of Canada's best gold mines ever, 12 million ounce producer, over 50 years. We're right beside it. We've got some fantastic grades. This thing was in production in 2013 as recently. We think there's been well over $50 million in drilling done on this property. We bought it for $1 million. Second thing I'm going to tell you about is the Knight Project. We acquired this in early this year, January 2018. This project has, those grades there sort of speak for themselves. 18 grams over 65 meters, 13 grams over 82 meters. It sits right on top of a 4 million ounce deposit owned by a major mining company. This is our flagship project, but we just bought it in January. So I'm going to tell you more about that in a minute, but this really excites us. The third thing I want you to remember is our Marauder mine. We went public on the back of this asset back in 2013. It was our flagship, but it's evolved, and it's evolved into a restart of a mine that is going to throw off an awful lot of cash flow. And you can see our PEA numbers, which again just came out in January this year, show almost a cartoonish IRR at 150% with $30 million NPV. That's almost $10 million a year in free cash flow that this asset can throw to our bottom line, which we will use to expand and develop our existing resources, including the first 2, and of course the Marauder itself. The Marauder is much bigger than this PEA, but it requires investment, as all of our properties do. And the last thing we announced, and this is happening as we speak, when we acquired the Knight Project, which was a consolidation, we actually acquired 9 properties. 2 of them were cobalt. One's a cobalt silver mine, and the other is a nickel property. We're spinning those off into a brand new company called Power Ore. It's fully financed. It's going to be listed on the Venture Exchange in May of this year after our Orefinders annual general meeting. So that is going to have a similar business model to Orefinders. It's going to be an acquisition co, focused in the Abitibi, but it's going to get exposure towards the nickel and cobalt battery or metals, which are the ingredients for batteries. So it's going to start with a cobalt asset, and you're going to see us acquire potentially more cobalt, but certainly nickel. I really like nickel. I think that's the real battery metal. So that's a really exciting opportunity for us, and Orefinders is going to be a 36% shareholder of Power Ore. And of that 36%, half, so 18%, is going to be dividended directly to Orefinders shareholders. So it's effectively a dividend for our shareholders. So what is Orefinders? What do we own? What will we buy? Advanced stage projects, existing resources, you got to drive to it. We do not want to deal with helicopters. It's all about access to infrastructure in the Abitibi. We buy old mines because we believe, there's the old adage, where do you find a mine? Well, in the shadow of a head frame. That's true, but we actually think you find new mines on old mines. And I'll show you what I mean by that. And so that's what we focus on. We focus on buying old mines, but we want to look at them in a new context. And there's lots of ways you can do that. And last, you see no exploration preparation. And what do I mean by that? Orefinders is absolutely an exploration company, but right now we're not. We're not interested in drilling. Not at all. The economics don't support it. It's just that simple. Look at Orefinders. We're a $10 million company. We're tiny. We're probably the smallest company here. If I want to do a drill program of any substance whatsoever, $2, $3, $4, $5 million, I have to give away 50% of my company for a high-risk drill program that nobody's going to care about unless I hit, Gold Strike or Hemlock. So no, the economics don't support it. What are we going to do? We're going to do some preparation, understanding the acquisitions that we just bought. We're also going to look at new acquisitions. If we can buy them in what we think is an accretive way, you'll see us do that. But we will drill again, just not now. So our thesis, why do we want to buy these things? Well, we just heard Kelvin talk about reserves, healing balance sheets. That's exactly what's going on, in combination. Since 2011, 2012, when everything sort of fell apart, everybody, when I say everybody, the big producers have been avoiding M&A, deferring CapEx, high-grading their deposits because of the lower gold price. What does that mean? That means their mines are getting tired and old, and without M&A, which is the lifeblood of this industry, and now that their balance sheets are healed, they're going to shift their focus towards growth. And that's where we're going to be. So all these miners need to replenish their reserves. Where are they going to come? My bet's they're going to come to Canada. And when you come to Canada, where are you going to come? I think the Abitibi is the best place to be. So to use the cliche of the Wayne Gretzky, where's the puck going to go? Well, that's how we're thinking. So we think, very clearly, we think M&A is coming. And if that gets coupled with a rise in gold price, which is entirely possible, we're going to be in a fantastic position because we're going to own a lot of great assets in the best jurisdiction in the world. This just goes back to where do you find, a mine? Well, look at all these assets here. You got Gold Strike, Red Lake, Malartic, Detour, Island, Sigma Lamac. All of these mines are new mines, but they used to be old mines. A lot of them used to be high-grade underground mines. They've been reinterpreted, looked at in bulk tonnage. Another one that's up there that's going to be a mine is the Cote De La Project. It's owned by Iron Gold. That was what we did. We consolidated that area in the early 2000s, bought 3 former producing high-grade underground mines, and we looked at it in the bulk tonnage context, and it was ultimately sold in 2012 for $650 million. So that's the thesis. That's the success we're trying to recreate with our assets. And these are our assets right here. So on the far west, you see the Knight Project there in blue, the Marauder, which is right in Kirkland Lake in the middle, and then the Mcgarry is just on the border of Quebec and Ontario. And over to the west there, the furthest west property, that's the Cote De La Project. And that's what got our feet wet in that area and really gave us an understanding of the geology there. So that's our focus. That's a 70-kilometer radius. Everything's really close. And as I said, the Trans-Canada Highway runs through most of these properties, so access is excellent. So just quickly, I'm going to run through my assets here that we bought. This is the Mcgarry. We're in the blue here. You can see we've got about 150,000 ounces at 8 grams per ton. Small, super high grade. We view this as an exploration project, despite there being full mining infrastructure in place. They were underground and mining this thing 5 years ago. But what's really important, and what you may see us do, because we are in the acquisition mindset, we've got the Cote mine there. That's owned by a group out of the U.S. And then there's Bonterra's got another 1 million ounces directly to our west. Bonterra's been wildly successful in Quebec, not paying a lot of attention to their Ontario stuff here. This is a consolidation area. This camp, could be the next big thing in the area, we think. So there's a lot of potential there. This, just an aerial photograph here, that's the Cote mine there. That's a 12 million ounce producer. I can't emphasize how profitable that mine was when it was in production. The owners are actually, as I said, a U.S. group. They're very actively looking at it in a bulk tonnage context as we speak. They spent a lot of money in 2017, 2018 trying to prove out that theory. And that's us there in the red. So, that's our head frame. Great facilities there, and then you can see the town of Virginia Town in the back was very supportive of us coming in there and trying to make another go out of this thing. These are just some of the grades. I just wanted to point them out quickly here. Don't want to get too technical because there's lots of technical detail here, but if you see 8.2 grams over 98 meters with a good width, that's a mine. There's no doubt about it. And they're taking this from underground, so this isn't some drill hole or grab sample. This is underground panel sampling that was done back in 2013. That's substantial, and given the infrastructure is already in place, that's very interesting to us. And I emphasize, we bought this for less than $1 million. And there's more examples of that, but that's just sort of the headline there. Now I'm going to shift gears, quickly. I only have limited time, so I want to talk about, what was our flagship, and that's the Marauder. Okay, so the Marauder project, again, former producing mine. It has an open pit on it. It has 2 underground shafts. In 2017, we did a bulk sample out of the open pit. We sent 25,000 tons of material to IAMGOLD's Westwood facility, which is about 80 kilometers away. The average grade was 2 grams per ton. We made about $2.5 million revenue. $500,000 of that flowed to our bottom line, and about $500,000 went to the road infrastructure and permanent bridge. That gave birth to this PEA. And the PEA takes that 25,000 ton bulk sample and expands it to 1 million tons. Okay, so a substantial project. It contemplates sending 80,000 ounces or 1 million tons at 2.6 grams per ton in pit. That's substantial. And the economics are fantastic because the capex is so low. It's $2.5 million to restart this thing. As I said, the infrastructure is there. You can drive your Tesla right to the edge of the pit. So we're not going to build a mill, not at the get-go. We're not going to build a tailings facility, not at the get-go. We're going to bootstrap this thing like they used to do when the mining industry made a lot of money. This is a project within a project. Okay, so it's this $30 million NPV, that's small in the terms of mining, but this is a start. There's an awful lot more gold in there. In fact, we've got a 500,000 ounce resource on it, but we only looked at a very small, high-grade portion of it for the purposes of this exercise to generate cash flow. So we're not at the mercy of the market to finance at what we think are unacceptable prices. So this is just a quick summary of what the Marauder is. This is the open pit. The stuff in red there, that's our 500,000 ounce resource at 1.3 grams per ton. Anything below that south dot or the dotted line south of that, that's what we call the south zone. That's where you get the 2.6 grams actually per ton in pit. That's where we're going to be focusing on. The Marauder north there, that was a separate mine. It has a shaft under it. It's a different style of mineralization. But again, like all of our properties, it needs investment. It needs to be drilled out. Just like everybody here, we're all looking to invest in our properties. But the whole concept of the South Pit is to generate our own cash flow so that we can further define and ultimately attract the likes of a Barrick or Agnico to take us out. Because I'm not on the mission to build a mine. I'm on a mission to make money for my shareholders on a per-share basis. And this is the best way we see doing it in the context of this market. And this is now my baby, okay? So it's hard to choose between your children, but the Knight project is now our flagship. We see a company maker here. We see it as Cote Lake Part 2. Our stuff's in the blue, okay? Those are 5 properties that we consolidated from 3 different property owners. This area was fragmented. Below, you see 4 million ounces, what's called the Juby project, that's owned by Tahoe Resources. So that's 4 million ounces in a pit. We think we probably have about 1 million ounces right now without drilling anything once we sort of put it all together. So right there, between those two projects, that's 5 million ounces. Both have substantial upside exploration. Look at these grades here. Again, these are the grades on the Minto. That's a breccia pipe. What a breccia pipe is, think of it like a carrot or a finger. That's what these things are. Super high grade, not a lot of tons, but these things tend to happen in clusters. So, where there's one, there's probably 2, 3, 4. But what you're really after is the hand, the source. Where did all this stuff come from? Because these are sort of like, magmatic things that, penetrate the surface. And this one comes right to surface, and look at those grades. It's been drilled all the way down to 1 kilometer, still in mineralization. And what's particularly interesting to me are these intersections, different intersections, lower grade. They're further to the west, so just going back here, so they're on the Porphyry Lake, which is the west to the Minto there. We get 1.5 grams over 75 meters, 2.2 over 35. That's right at surface. That's disseminated. That's bulk tonnage material. So that's where we see the future of this thing. We see 10 million ounces again. Forward-looking statement, but that's the sort of project we see on the Knight project. So that's what gets us so excited. This has to be drilled out. We'll do it whether we finance it from the Marauder or if the market improves. We'd look to sell some shares, but certainly not. We're not looking to raise money in the context of this environment. Last, before I let you go and eat lunch, is the power ore. When we acquired the Knight project back in January, we actually acquired 9 properties. 2 of them were not gold. Okay, so one of them was a silver cobalt mine, and cobalt's getting an awful lot of attention, and the other was a nickel project. The silver mine, or cobalt silver mine, as I'll indicate here, had some excellent grades, some of the best silver grades and cobalt grades around in that area, which is in the cobalt district of Ontario. We get over 1% over a meter. But the silver grades are fantastic. Make no mistake about it, these are all silver mines. They just happen to have a unique style of mineralization that also gives them exceptionally high cobalt, and that's why this area is very popular. So we are vending this asset along with the nickel project out of Orefinders into Power Ore. Orefinders is going to be a significant shareholder, 36%, as I said. Half of that's going to be dividended out to Orefinders shareholders directly. And the balance will be held on Orefinders' balance sheet and will participate with the marketable securities. So it's a way for us to monetize this and gain exposure to this new story. We think we're relatively, all of our counterparts, our competitors, or our comps, if you will, their market caps start at $20 million for owning an asset just like this. But we think ours is as good, if not better, than most. So, and if you think about that, Orefinders is a $10 million company. It doesn't make any sense. We already own it. That's why we're a pure play company, okay? So that's why we're trying to extract something that doesn't get any value. We're going to stick it into a new vehicle, and it's going to have the same business model, which is to grow and acquire. We're not going to explore because, again, I don't think the economics support it, but we can buy great stuff at far less than the replacement and discovery costs with much less risk. So you'll see that just on Power Ore. As I said, it's fully financed. It's going to be traded in May, and if you're an Orefinder shareholder, you will get exposure to that. You'll automatically become a Power Ore shareholder. The ratio is about 16 to 1, so that's the dividend rate. Lastly, just want to talk about the core management team. These are the 3 pillars of Orefinders and Power Ore. It's run by myself and Alex Stewart, who's my father, chairman. We've been working together for 20 years. We're 50-50 partners on everything. I'm sort of front of the house. He's back of the house. He's corporate securities. He's really good at what he does. Charles Beaudry, I've known Charles for 10 years. I put him up against anybody in terms of his knowledge and experience in the Abitibi. I've been trying to get him on my team for a long time. As soon as I bought the Knight project, the forward-looking statement, 10 million ounce, he came on side. He sees it too. It's his vision. So those are the key people there, and that's ultimately who you're investing in, is people over projects. And that's who runs Orefinders. So lastly, in conclusion, the 4 things I want you to remember. Very, very simple. We got the Mcgarry. It's a high grade. It's located directly beside one of the best mines ever. And it has an established high grade resource. We got the Knight project, which is our flagship. It's a company maker. We see 10 million ounces, and we have an awful lot of gold, as you can see, on our properties and directly below us. And then we have the ability to generate our own cash flow through the Marauder. Very, very profitable project. low dollars to put into production, and that's already financed when we want it to, by the way. So we're going to do it on a debt financing with our second largest shareholder. And then lastly, power ore. We think that's a bonus. So that's just, I think that shows management's initiative to generate value for shareholders, which has always been our focus, whether it's revenue from the stockpile program where we made money in lieu of raising additional money by selling our shares, or creating value through new opportunities like power ore. So that's it. If you have any questions, I'd be happy to answer them here. My email's there. If you want any, if you want this presentation, just send me a note, and I'd be happy to share it with you and answer your questions. Thank you.